You can feel it, right? The stock market has a serious case of the jitters. But what if all this panic is completely missing the point? Well, in this explainer, we're diving into a really fascinating thesis that connects this nervous market with the world-changing currents of AI and crypto.
So here's the big question. Is this the start of a massive crash, or is there a bull market hiding in plain sight? I mean, everyone's talking about a bear market, but the data suggests something way more complex. And frankly, a lot more interesting is happening just beneath the surface.
Okay, first things first, let's dig into why everyone is so nervous right now. Because, on the surface, the warning signs are absolutely there.
The market has what some analysts call bad breath. You've got speculative tech stocks that have seen a huge correction. There's been a, quote, retail bloodbath in a lot of popular names. And we're also seeing really poor market breath. That means even if a few huge stocks are doing well, most are actually falling. To top it all off, you have these technical signals like the Hindenburg omen, which is just a fancy indicator that flags conditions ripe for a crash, and they're showing up in clusters. So yeah, it's no wonder people are on edge.
But here is the major twist. This really isn't a story about an imminent crash. These surface-level fears are kind of a distraction from a much bigger, more powerful story that's unfolding, a fundamental rewiring of our entire economy. So now for the other side of the argument, the idea that this isn't a bear market at all. There's some powerful evidence suggesting this is just a correction inside a much larger, structurally sound bull market. And the engine that's driving it, you guessed it, AI.
First off, let's talk about the banks. John Roque from 22V Research makes a great point. Strong banks are a sign of healthy credit. And unlike a lot of previous downturns, major banks are actually hitting all-time highs. Now think about it. If the financial system were really in deep trouble, that is the last thing you would expect to see. And what about how companies are actually doing? Well, get this. An incredible 82% of S&P 500 companies have beaten their earnings per share estimates this season. That's not just good, it's actually above the 5-year average. Companies are making way more money than anyone expected.
So the question is, how are they pulling this off? Well, the secret driver, the secret sauce, is expanding profit margins. Companies are becoming radically more efficient, and the main tool they're using to do it is artificial intelligence. It's cutting costs and boosting productivity in ways we're really just starting to grasp.
And this brings us to such a crucial point. Remember the dot-com bubble? Companies laid down tons and tons of fiber optic cable, and something like 97% of it just sat there, unused. It was called dark fiber. Today's massive investment in AI computing power in GPUs is the complete opposite. As Gavin Baker from A16Z points out, there are no dark GPUs. They are all being fully utilized right now, driving real productivity and real returns. This isn't just speculative hype. It's a real, full-blown industrial build-out.
But, and this is a big but, this AI-driven efficiency isn't just changing corporations. It's creating a stark and pretty challenging new reality for society. Even Fed Chair Powell has talked about this. We're seeing what's called a bifurcated or a K-shaped economy. So at the top end, you have consumers who are spending freely, they're benefiting from rising asset prices. But at the lower end, people are really struggling, buying less, and facing a weak job market as companies slow hiring. And they're pointing directly to AI as a reason why. Now, this kind of divergence has real consequences. As a memo from Peter Thiel once noted, if people feel like they don't have a stake in the system, they might just turn against it. The analysis we're exploring today makes a direct connection between this feeling, especially among the underemployed, and the documented rise in socialist ideas. Okay, so how does this massive economic shift connect to the world of crypto? Well, to understand that, we actually need to rewind the clock and look back at the last great tech revolution. The thesis here presents a really powerful analogy. So think back to when the dot-com bubble burst in 2000. The NASDAQ went through years of painful, grinding consolidation. But during that downtime, lasting, world-changing companies like Google had their IPOs. The argument is that crypto is in the exact same phase today. The 2021 bubble burst, and now we're in this consolidation period where the early investors are selling off. This is what's being called the Bitcoin IPO phase. So what's the key takeaway here? It's simple. This isn't a sign of failure. It's a necessary cleanup. It's the market maturing, shaking out the weak hands, and building a much stronger foundation for the technologies that are actually going to survive and thrive, just like what happened 2 decades ago. And that brings us to the final and maybe the most mind-bending piece of this whole puzzle, the inevitable collision course between the two most powerful technologies of our time.
Let's just break this down with a super simple framework. AI is becoming autonomous intelligence, and crypto is becoming native digital money. For this coming wave of AI agents to truly operate and transact in the world on their own, they're going to need a financial layer that isn't controlled by humans or old world banks. They'll need a native currency.
And that leads to the staggering conclusion. AI is the intelligence layer, and crypto is the financial layer. And together, as the Moonshots podcast put it, they are forming an entirely new operating system for the global economy. This isn't just a correction or a new technology. We're talking about a fundamental rewiring of, well, everything. And the question this leaves us with is pretty simple and pretty profound. What happens when that new operating system finally boots up?